Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you 3 examples of morning gap trades from this morning that worked out picture perfect. You're getting a sneak peek of one of them on the screen right now. It was Splunk. We'll get deeper into the charts in a minute. It's extremely important. But first, let me explain a little bit more about what this gap trading strategy is all about. As day traders, we need opportunity. In order to find opportunity, we need stocks that are moving at the opening bell. That's what creates the opportunity. But the real opportunity is found by traders that can identify a specific price level where these stocks that are on the move will first be drawn to like a magnet and then have a price reaction from in the other direction. Now that's just one piece to the puzzle. In my course at LazyGapTrader.com, traders learn everything they need to know in order to trade the gaps successfully. What are all the criteria that we use? Which stocks does it work the best with? What type of volume criteria do we look for? How much of a stop loss limitation do we need to have? What type of profit targets do we look for? How much of a gap higher or lower in the morning do we look for? And most importantly, and here's the holy grail folks, traders learn exactly and precisely how to calculate and come up with the exact price levels that you see here, where these stocks will first be drawn to like a magnet and then have that price reaction from in the other direction. Before we dig deep into the charts, let me just explain the other thing I do, which is give traders an opportunity to get my gap trade sent to them first thing in the morning, 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Now this morning, we had 7 potential gap trades on the board. All the possible opportunities are not going to hit their price targets. What we're looking for is to identify a short list of opportunities, hone in on these particular stocks, knowing that the probabilities are pretty good that 1 or 2 or 3 of them are going to hit their specific price targets. Well, as a result of this list, 4 price targets were hit today, 5 if you count one that missed by like 8 cents, and we're going to go over the charts real quick. The one that missed by a few pennies was Marriott. Our price level was $113.08, and Marriott made a low about 8 cents higher than that and then took off to the upside. But that's what happens sometimes. We just move on to the next trade. Cohu, C-O-H-U. This one did hit its price level, but it was a no trade. Traders that have taken my course understand exactly why this was a no trade. Traders that haven't taken the course, but get my price levels each and every day against my recommendation, they took a loss on this trade and they don't understand why. The course is a small price to pay. The losses outweighed the price of the course. You go figure that one out. The next one that hit its price target was NYT, New York Times, gap lower. Support levels are 25.94 and 25.09. Stop and profit target is about 25 to 45 cents. Keep in mind, these are minimum profit targets. The next one that hit its price objective was Splunk, gap lower. Support levels are 95.46 and 94.28. Stop and profit target is about 40 to 75 cents. We're going to take a look at all these charts. Keep in mind, minimum profit target. And then we had Ralph Lauren, RL, gap lower. Support levels are 129.22 and 126.71. Stop and profit target is about 50 cents to 95 cents. Minimum profit targets. Let's go back and take a look at some charts. Now here's a chart of Marriott. It was a no trade, but it was a heartbreaker, and I figured why not show it anyway? Because there's value in everything. We can learn from everything. Sometimes this happened, but what happened if the stock came down another 8 cents or so? Look at the rip higher from what happened. So here's the candle I'm talking about. We made a low of 113.17. Our particular price level was 113.08. So we're talking about 9 cents. But what happened just a couple of minutes later? The stock's at a high of 114.21. The point is that we do get filled on a lot of these trades. Some of them we don't, but you can see the power and importance of this price level. Even when the stock came back down, look what's happening now as I make this video. Traders learn exactly and precisely how to come up with these same exact support levels. It's very, very powerful stuff. New York Times, pretty stress-free trade. The stock closed yesterday up at $27.99. The stock is getting a nice haircut at the open. We identified a level of $25.94. minutes, the stock comes down, spikes through it by just a little bit, but stays within the stop loss limitation. And you can see here just minutes later, the stock is already at a high of $26.77. That's a nice, quick scalp trade. Fantastic day trade. How about Splunk today? Here was the prize today. The stock closed all the way up at 101.09. The stock is getting hit pretty hard at the open. We identified a price level of $95.46. And look what happened. You have to see this for yourself. The stock makes a low of $95.38 and then takes off to the upside, and just minutes later, the stock is at a high of $98.48, up over $3 or 3% in just a matter of minutes. It's the holy grail, folks. I'm telling you, when traders take the course and they understand how to find these specific price levels, the light goes on. They have a different understanding of why certain stocks trade to certain prices. They have a different outlook on trading once they have an understanding of the why behind the strategy. Once you remove the guesswork away from trading and add back in confidence, you change your trading from that point forward. There's one more on the board. We'll take a look at Ralph Lauren. It actually hit two price levels, and I want to explain something. There was only one trade on the board, even though we had two price levels. The stock closed yesterday up at 136.71, getting a nice haircut at the open. The 129.22 level, that's the first support level that we identified. You can see here that once the stock came into that price level, made a low of 128.60, that stays within the stop loss limitation, and then the stock shot up after that. Here's a 1-minute chart, and you can see the magnitude of what happened. After the stock found support at the 129.22, the high was 130.17 just a couple of minutes later. So that was another tremendous rally off that 129.22 in just a couple of minutes. And then the stock comes back down later. We're back on the 10-minute chart to the 126.71. Here's the thing. Traders that have taken the course know again why this was a no trade. Now, even though the stock found support slightly below that level, and look what's happening now, came right back to the first support level. Do you think that these numbers are important? You better believe they're important. And if you want to understand why they're important, come over to take the course at Lazy Gap Trader. You'll learn everything there is to know in order to trade the gaps successfully. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.